towards our single-digit objective. In this regard, the Bank of Ghana will continue to monitor both domestic and external developments and respond appropriately to ensure that the downward inflation trajectory observed in recent months is sustained without undermining growth. The 2023 experience of a strong reduction in inflation and stronger growth is instructive. The banking sector remains sound, liquid, and profitable. The Bank of Ghana will continue to closely monitor banks' capital restoration efforts in line with approved plans, including through support from the Ghana Financial Stability Fund, following the impact of the domestic debt exchange program. We expect early recapitalization to promote banking sector resilience and effective financial intermediation to help speed up macroeconomic recovery going forward. With a successful conclusion of the first review today, we need to begin to think of the second review of the program and beyond. While tentative indications point to sound implementation of policies through to December 2023, vigilance and commitment will be needed in 2024 to undertake all the structural reforms envisaged under the program. Implementation of these reforms to ensure the economy functions well will be critical. I will add, finally, that although a challenging year confronts us, we remain confident about the ongoing economic recovery process and would want to stress the importance of executing the needed structural reforms to support a better functioning of the economy. These reforms will be key in ensuring long-term sustainability of performance. Let me thank all stakeholders who have worked with us collaboratively to get to this point. Thank you very much.
Thank you so much, Dr. Addison, for the inspiring comments and assurances. We are confident that we are on the right tracks. On that note, I will yield to the Minister for Finance, Honorable Ken Ofori-Atta, for his remarks.
Thank you very much indeed, and good evening, and for most of us, a really happy New Year, Afishapa. So, colleague ministers, governor, deputy governors, minister of state, IMF mission chief for Ghana, technical staff of the Ministry of Finance and Bank of Ghana, members of the press, ladies and gentlemen. Really a great evening to you all, and let me welcome you all to the Ministry of Finance. The purpose of tonight's press conference is really to update our fellow Ghanaians on the implementation of Ghana's IMF-supported post-COVID-19 Program for Economic Growth, PCPEG, particularly the first review, and to provide a quick update on the economy and the outlook for the rest of 2024. But I think we've heard clearly from the governor on this. In that regard, it is with great honor that I can announce to you that earlier today, the International Monetary Fund endorsed the first review of our program. This is a resounding affirmation that the program is advancing steadily and our reform trajectory remains steadfast. Consequently, the endorsement has unlocked a $600 million disbursement from the IMF and will pave the way for an additional $300 million disbursement from the World Bank under the Development Policy Operation Financing. The World Bank will meet on Tuesday, January 23rd. In addition, we expect the World Bank to approve $250 million to support the Ghana Financial Stability Fund. These resources, in total $1.15 billion, will significantly bolster our economic recovery efforts. We are grateful to His Excellency the President of the Republic of Ghana, Nana Addo Dankwa Akufo-Addo, for his unwavering leadership. We also thank the Cabinet for their moral support and the EMT, led by our Vice President, Dr. Baumia, for their technical support and direction during this process. I also want to thank the Managing Director of the IMF, the senior management for the many interventions, and the IMF board for their belief in Ghana and for the support towards ensuring that we reach a deal with the Official Creditor Committee of the Paris Club. To Stefan and the team, we say a big thank you. And to the MOS team, the midwives of our economy, AICO, for all the work that you do. The IMF board's approval was facilitated by the debt restructuring agreement we arrived at with official creditors on Friday, 12 January, under the G20 Common Framework for Debt Treatment. And here, we would like to truly thank France and China for their leadership. Our official creditors concurred on ambitious rescheduling of all debt service due during the program period and a substantial maturity extension. This agreement grants us a considerable cash flow relief during the program period. Ghana will not be making payments on debt service or official bilateral creditors until the end of 2026. In light of this, I extend our deepest appreciation to Official Creditor Committee and their Secretariat for their constructive efforts over the past few months. Indeed, we thank the co-chairs of the OCC, France, and China for their tenacity in reaching an agreement that establishes the basis for the Memorandum of Understanding. In truth, the agreement reached of official creditors is a powerful vote of confidence in our economic strategy. The gains made so far from the implementation of the IMF-supported PCPEC program has been remarkable. Indeed, the IMF described Ghana's recent macroeconomic performance in its press release after the first review as compelling performance. Generally, the macroeconomic environment continues to remain stable. Going forward, strong and ambitious structural reforms will be implemented in the areas of tax policy, public financial management, energy, and cocoa sectors to support our fiscal consolidation and growth agenda. Taken together, today's agreement marks a pivotal milestone for the successful conclusion of our domestic debt exchange program in 2023. The remarkable success of the domestic debt exchange program, attributed to the sense of responsibility exhibited by the Ghanaian people and the resilience of our institutions, has been acknowledged by the international community as a strong sign of commitment towards restoring debt sustainability. The government is committed to fully implementing the IMF-supported PCPEC, and we have put in place all the necessary implementation arrangements to make sure the program does not derail so we can fully achieve our intended objectives. Now, the final crucial step in our strategy involves the restructuring of our commercial debt, particularly our Eurobonds. The IMF board's approval of the first review and the recent agreement of official credit set the stage for our impending re-engagement with bondholders, which will commence as early as next week. We are working hard to reach agreement with our bondholders in the shortest possible time. We are optimistic that we may arrive at an agreement no later than mid-March. Allow me to assure you that we remain steadfast in our commitment to act resolutely. Ultimately, we are sure in our resolve that our economy has certainly turned the corner, and across the government, we will focus on attaining a more resilient, transformed economy that delivers higher living standards for our people within the shortest possible time. Ladies and gentlemen, indeed, God has given Ghana victory, and greater things He will continue to do. So we give thanks to the
bring the microphone to you. You mention your name and affiliation and proceed to ask your question. Thank you. Okay. Okay, I've seen 3 hands at the back. So if you can send the microphone to them.
Yeah, Honorable, congratulations to you and on this milestone. When is the next review?
Name and affiliation, please.
Come again?
Name and
My
affiliation.
name is Echo Moses. I correspond for Bloomberg. Honorable, when is the next review? And can I go on now? Okay. When is the next review and how much disbursement is expected? And what conditions are we going to meet or are we expected to meet for the subsequent review? Thank you.
Thank you for the question. Yes.
My name is George Raffin from Joy FM Joy News. First one goes to Stefan Rodet. I just want some clarity. In your first review, you talked about seeing signs of recovery. I haven't seen a change in word in terms of your assessment on the economy. Are we still seeing signs of recovery, or since your last review and now, what has been the differentiating factor when it comes to the economy and the performance under the program? I want some clarity on that. Is it still signs of recovery, or we moved on from that phrase in terms of how the economy is faring? Also, what was the board or the staff's concern when it comes to spending an election year, budget overruns and all the rest? What commitment have you secured from government to ensure that in terms of spending within the approved budget and under the program, you are okay with? And that's the clarity I want from you on that one. To the finance minister, inflation is trending down. A lot of people are excited about that one. There are concerns that the new round of taxes that are about to be implemented could unwind that slowdown that we are experiencing. They are pushed that maybe government should take a second look at the timing of the implementation and whether some of the taxes can be reviewed as well. What are your thoughts on these concerns about, i.e., the taxes that are going to be implemented and how that could impact on inflation as well? Thank you.
And thank you, George. We can take 2 more questions. Yes.
Hello, good evening. My name is Michael Obodu. I work with TV3. And to the minister, congratulations on this feat. We know that securing the deal with the OCC was crucial to getting the second tranche approval. Please help us understand. We know earlier you had wanted 30 to 40% haircut. What percentage was secured and how much savings did we make there? And then also, we've seen some positive signs with Ghana's Eurobonds since the approval of the OCC. Some had raised concerns that this whole debt exchange will impact investor confidence. Now, what is your response to such people? Thank you.
Thank you for the questions. If there are any hands, we take the last, okay, for this round.
Good evening, Minister. My name is Joshua Amlanu with the Business and Financial Times. My first question has to do with, you have the expectation to meet, that's the China and your commercial creditors. What are your expectations? What do you expect to gain out of the meeting? If you could give us some details going into that meeting. The second question would be a moratorium in terms of our debt payments up until 2026 and extension with regards to the maturities. What preparations will be set in place or mechanism will be set in place in order to ensure that beyond 2026, we have the strength as a country to be able to make payment when they fall due? Thank you.
Okay, thank you for the question.
Thank you very much, indeed. Moses, I think that the next review is scheduled for maybe May 1st, 2024. And the disbursement is about half of what we have, maybe $360 million. I believe that's what it is. Why don't I get through my side and then Stefan, I'll toss it over to you afterwards. The OCC, I mean, essentially, almost like a $2.8 billion restructuring between 2023 and 2026. So that gives us sort of the fiscal space to be able to operate much better and look at our growth strategy. It's a flow type process. So it really gives us, that necessary fiscal space to operate, which is important. The expectation during this period, as you are talking about post 2026, is that our revenue collection process gets stronger as we've also tightened our expenditure controls. We can see from GRA, I believe it was maybe 57 billion cedis that they were able to raise in 2021. 2022 went up to 75 billion, and this year they did 113.2 billion. So you can see a gradual increase in strength, and therefore it was about 43%, 49% over nominal of the previous year. Our expectation is that with VAT, etc., by the time we get to that period, we'll have adequate resources to be able to meet the obligations that you are talking about. Eurobond, what do we expect? We met the steering committee representative in Marrakesh, and they gave us a proposal. We also met more of the investors in London somewhere in October, in which we kind of broadly outlined that we'll be looking for a haircut of some 20 to 40%, 20 years and under 5%. That took a hit in the market place. But I think now we all have more information what has happened with the domestic exchange, what the OCC is doing. So that will guide us into a resolution that I think will be fair for everyone. So I think we are quite excited. We've been forthright in these dealings. Ghana has also burden shared considerably. We expect that we'll have very cordial and progressive discussions going forward. So we are looking forward to those discussions. And really, I think the program so far is quite clear. It's not only an issue of where we were some time ago, but clearly all of us are seeing the hard work being done, exchange stability. It's clear Bank of Ghana resolute in the monetary policy. The increased reserve is comforting. And to a certain degree, I know we wanted to go have the board meeting in November 2022 of last year. I believe, as I said, maybe the Lord tarries, but he's never late. And maybe this might be the best time to have been doing this to give us confidence to start the year. Thank you very much. Stefan, over to you.
Thank you, Minister. Perhaps I can say a few words about the next steps in terms of engagement under the fund program and the next review. So the next review indeed will be the second review of the program. It will be a review that assesses performance at the end of December 2023. So we have quantitative objectives under the program that need to be met for end 2023. And that review will assess performance in this context. It will assess performance on reforms as well. It will also revise projections as we do at each review. In terms of timeline, we have not discussed with the authorities yet exactly the date of the mission, but logically it should take place probably early April, I would say, indeed with the objective of going to the board in May or early June. So that's the sort of the broad timeline that we have in mind, but we still need to discuss the details, and in particular the scheduling of the review mission with the authorities. I wanted to say a few words to respond to George's question about our assessments of economic development, so that the assessment has not changed. It is the same now than it was during the mission or at the end of the first review mission in early October, except that developments since then have continued to go in the right direction. So the assessment is even more optimistic now than it was at the time, I would say. And the assessment is one of coming to the conclusion that there are signs of stabilization in the economy, that inflation is going down very rapidly, the external and the fiscal position are turning around, reserves, international reserves are accumulating. All of that is very good sign, and more progress since the review mission in October. And then the other part of the assessment is that economic activity is performing better than what we had in mind. And this is why we are revising our growth projections up in the context of this in this review. A few words about expenditure performance in 2024 as the government is going into elections. You know, we have objectives under the program, both in terms of spending. Those are codified in the budget that was approved by Parliament and enacted. We have targets, quantitative targets under the program. Performance so far has been good. We hear about the very strong commitment that the authorities have made to continue to follow the program objectives, and that makes us quite optimistic, I would say.
Maybe I could come in with just a response to that last question from George regarding the impact of taxes on inflation, and to say that that is not necessarily the case, and that taxes and inflation, if you look at it, in a sense, it's a withdrawal of, income that is going to those that are paying the taxes. And to the extent that it helps in the fiscal consolidation process, it should not necessarily lead to an increase in inflation. In fact, the Bank of Ghana would continue to manage the inflation side of the macro. And if you look at where we are with today's rate of inflation of 23%, we are probably even lower than the monetary policy consultation clause, the lower bound of that inflation. And we tried to explain to you why that was the case. We have seen the exchange rate perform rather strongly than initially envisaged. And we have also tried to explain that as partly due to the stronger reserve accumulation that we have seen because of the Gold for Reserves program. So the increases in taxes should not necessarily lead to higher inflation. In this instance, we expect it to help improve fiscal consolidation and therefore help us in bringing overall, macro pressures down.
Thank you so much, Dr. Addison, Honorable Minister, and Stefan. We will take the last set of questions. If there are any hands or any follow-ups, this is the best time to ask. If there are no hands, okay, I've seen 2 hands at the back. Okay, so him first because he's not asked any question.
I'm Maxwell Adumbila Reuters. I just want to confirm or be sure that the next review and the next payout is not related or tied to the whatever happens with the Eurobond holders. And then relatedly, the issue of comparability of treatment. Minister, I hear you allude to what happened in the domestic exchange. I mean, the domestic side of the debt restructuring relative to what our bondholders should be willing to take. But how is the discussion with the bondholders related to whatever happened with the bilateral creditors in the context of comparability of treatment?
Thank you. Go.
All right, just a follow-up, and this is to Stefan and by extension to the governor. Stefan, do you think that given these projections you just talked about, do we definitely need to have a very tight monetary policy stance going forward? Because 30% is really, really high. And if inflation is slowing, is that really any concern to you at all? Thank you.
Thank you. I saw two hands here. If you can pass the microphone. Okay, go ahead.
This to the IMF chief. When should we expect the disbursement of the 600 million? Thank you.
Thank you, Joshua. The last question.
Okay, my name is Neil Atilati, City FM, City TV. Honorable Minister, are we to expect a reduced appetite for treasury bills, given the fact that you're expecting about 1.15 billion from the IMF and also the World Bank? If you put the disbursement together, are we to expect a reduced appetite from your end because the subscriptions are happening, yet the yields are high, and then government keeps borrowing, and if it affects the country's debt levels?
Thank you for the questions, Honorable Minister.
Thank you very much indeed. Maxwell, I think the challenge in all of these negotiations is that they are quite complex, and it leaves sort of debt management and negotiating skills to land in the proper way. So it's always very difficult to know. But I think one thing that goes with negotiations is the issue of trust and whether you've also taken a hit yourself. And I think we have, and we have shown that we have paid our dues. So we go with pretty clean hands. And the issue you referred to is what happened to Zambia. Later went on to get an agreement with the OCC debt was much more than the Eurobond holders. I think ours is reversed, and we already, put out in October sort of the broad parameters that we are going to look at. As you mentioned, the bonds even strengthened over the weekend. So there's a certain acknowledgement that we are all working in the same direction. And how do we strike a deal that will be fair to all parties? And really, that's the spirit in which we will look at. The issue of comparability of treatment gets very complicated, and at the end of the day, some fairness is what we'll have to work at. We would like to, in particular, get a very simple structure for the new instruments that we'll have. So it is what we'll be looking to do that. I think elections is a question that keeps coming as to whether we'll be able to keep the horses in the barn. And I believe we will. I think we all went through a very difficult 2022 period in which all citizens, all politicians saw the devastation that can happen when inflation soars and the currency wobbles to the way that it did. So that will be first and foremost if you want to look at any strong election victory. So we'll have to, by the nature of it, work to make sure we keep the program in place. In addition to that, with each review will be about $360 million, maybe twice this year, possibly. And those will be resources that will be required. So I think we'll have to stick to the program to make sure that that release occurs. So those are some of the guardrails that I will see to. But I think deeply it's going to become our own discipline in expenditure management, which then will flow into City. Your question about how to then manage the whole treasury bill market. One of the key issues for us, of course, is the payment of the restructured debt or the domestic, which will be in February, and we'll get ready for it. But the stronger that GRA continues to perform, the more disciplined we are of our expenses. That pressure for more public financing will be reduced on the treasury bill side. So that's what we see. I think the issue of disbursement, Stefan, that question is directly for you.
Thank you, Minister. So the 600 million disbursement is really, it's imminent. I believe the funds should be available to the central bank already. It's a matter of hours, not a matter of certainly not a matter of days or weeks. On your question on the monetary policy stance, of course, I would like to, the governor will come in on this. I would say we are very happy about the path, the disinflationary path that we are seeing. Inflation is still too high, of course, 23% is too high. And so I would say in this context, it is important for the central bank to keep a sufficiently tight monetary policy stance. But that does not mean that interest rates should remain at 30% plus forever. If we continue to see that inflation decreasing, it will certainly create room for the central bank to alleviate the burden on that front. And that's certainly what we are planning for in the context of the program. Our projections also assume that interest rates at some point will be lower, and that is consistent with also the projections that we made in terms of inflation continuing to decrease going forward. With regard to the links between the discussions between the government and its external private creditors and the link between that and the review, I would remind you that and this is applied already at the time of the program approval and this morning again at the time of the completion of the first review, that the standard on that front, we applied what we call the lending into official arrears policy. What is very important is that the government engages in good faith negotiations with its external private creditors for our board to be comfortable with the progress that is being made. So that will continue to be the standard going forward. We do hope, of course, for a rapid conclusion to those discussions. It's certainly in the interest of Ghana, and we very much hope that good progress can be made in the next few weeks.
So let me come to this monetary policy question on whether, we are going to continue with a tight monetary policy stance. As Stefan said, a tight monetary policy stance does not mean that the policy rate has to stay at 30%. The last MPC press conference, we had said that the rate will be tighter for longer to ensure that, inflation expectations are anchored towards a single-digit objective. But that doesn't mean that between getting to the single digits, you would not see, a downward trend in the policy rate. We expect that the MPC would be meeting very soon, and then we would have a discussion on where to, direct the decisions on the policy rate, and hoping to provide some guidance on the market, on the domestic market, particularly the auction for the treasury bill. So the decision at this particular MPC meeting, we hope would feed through to the auction after that meeting. Thank you.
The IMF Mission Chief for Ghana, Mr. Stefan Rode, the Governor of the Bank of Ghana, Dr. Ernest Addison, the Minister for Finance, Honorable Ken Ofori-Atta. Thank you so much for making time for this important exercise. I would also like to thank our media partners for the live coverage: GTV, Joy News, City TV, TV3, Metro TV, Asasi Radio, Oman FM, ABC News, GH, and Wontumi TV. On that note, I will invite Ms. Ruth Botio for the acknowledgements and closing prayers. Ruth, over to you.
Thank you, Honorable Fati. Thank you, ladies and gentlemen, for staying with us through this press release. Before we go, I'd like to acknowledge a few dignitaries in the room. We have, of course, the Honorable Minister for Finance, Honorable Ken Ofori-Atta. Virtually, we've had Dr. Ernest Addison, Governor of the Bank of Ghana. We've also had Mr. Stefan Rode, IMF Mission Chief for Ghana. And in the room here at the Ministry of Finance, we have Dr. Mohamed Amin Adam, Minister of State at the Ministry of Finance, Mrs. Stella Williams, Coordinating Director of the Ministry of Finance, Dr. Alassane Idrisu, Mr. Samuel Akes, Mrs. Yvonne Kwanzaa, Mr. Samson Kligo, Mr. Kwekwedu, and Mr. Ernest Akori, who are all directors of the Ministry of Finance. We've also had the first Deputy Governor of the Bank of Ghana, Dr. Maxwell Opoku-Afari, the second Deputy Governor of the Bank of Ghana, Mrs. Elsie Adu-Awaji, and various directors and staff of the Bank of Ghana, whom we work very closely with. Thank you all for being with us today. Thank you to our very able moderator, Honorable Fatimata Abubakar, and thank you to the ladies and gentlemen of the media. Shall we bow our heads for the closing prayer, please? Our Lord and Heavenly Father, we invited you before we began, and you have been with us. You've been with us right from when we started with the IMF, through the reviews, through the board approval, to today and beyond. Father, we commit the rest of this journey into your hands. Help us, help Ghana to be restored to the path of macroeconomic stability, and help us to experience phenomenal growth and transformation like we never imagined before. Indeed, the word for the season is that this is the doing of the Lord. This day's achievement is your doing. We thank you and we bless your mighty name. Amen.
Honorable Ministers, ladies and gentlemen, that brings us to the end of today's press conference. Thank you so much and enjoy the rest of your evening.